Today we're going to have a quick review of Castor Maritime. I initially bought some shares in this company on the 1st of February 2021. Today is now the 21st of March 2021, and my holding has risen from the value of my per share price has risen from 70 cents to 95 cents. So the company is moving in the right direction. Castor Maritime owns and operates 9 dry bulk carriers and 1 tanker. And it says here, growth-orientated global shipping company engaged in the seaborne transportation of a wide range of dry bulk commodities along worldwide shipping routes through our ownership of dry bulk vessels. The current price is 95 cents. 52-week range is 11 cents to $1.95. As I said, I purchased my holding on the 1st of February this year at 70 cents a share. The current price now is 95 cents. The price to earning ratio is 7.89. This is less expensive than transportation sector average, which is 26.83. The price to book ratio is 0.17. Anything below 1 indicates that a company could be undervalued with respect to its assets and liabilities. There's more demand for the supply of dry bulk goods as we come out of the pandemic. So everything is moving in the right direction. This is taken from Castor's website, and it shows you here clearly that they're making lots of acquisitions. The 21st of March took delivery of Magic Argo. March took delivery of Magic Orion. March took delivery of Wonder Polaris. March took delivery of Magic Venus. October 2020 took delivery of Magic Nova. So they are going for a process of fast growth and taking advantage of the current market. This is from their site, a comment that has been made. Here we go. I'll just read that to you. It says here, Petros Panagiotis, Chief Executive Officer of Castor, commented, we are very pleased that we have been able to quickly utilise our recent raised capital by agreeing to the acquisition of our 7th vessel. We believe it is currently an opportune time to move to larger dry bulk sizes, as we are of the view that these also will attract benefit in the current improving market. We are committed to further expanding our fleet by taking advantage of attractive opportunities presented to us in all vessel sizes and segments, allowing us to achieve our long-term goal of delivering long-term profitability to our shareholders. So everything looked good when I initially bought the shares, and it's looking even better now. So now might be the time to buy some more and sort of carry on riding the increase. As I said, the current price is 94 cents, or just over 94 cents. And you can see from this graph here, the 1 year, how the prices are moved from sort of 27 cents up to 174. And it's now sitting at 94, so there's a lot of more room for growth to get it back to what it was a year ago. So this is an interesting little article I found on a broker's site. It says the 2021 daily charter rates are as follows, link included, and that's depending on the size of the bulk carrier, what the actual rate they earn per day. $16,000, 18, 24, 28, and that depends on the size of the carrier. Scrolling up, there's a note here. It says Panagilodis has positioned Castor Maritime to be a global leader in dry bulk goods shipping, and with every vessel he acquires, he is rapidly growing the revenue for the future. So keep a sharp eye for their earning reports, as they will look to impress shareholders and future investors. The Kamsarmax that he recently purchased has already been put to work under a time charter agreement of $18,500 per day. Over the next 5 to 7 months, the vessel is estimated to be bringing in $2.8 million to $4.2 million. Granted, not every vessel is bringing in the same daily charter rates, but hypothetically, if $18,500 were an average, Panagilodis' fleet could be netting up to $222,000 per day moving forward. This is equivalent to approximately $81 million per year in revenue. That's obviously if everything sort of worked out to plan. This may be hard to believe, but they are on a pace to grow their revenue by over 800% within this year. As you can see, what I showed you earlier, the acquisition of bulk carriers in March alone. So I think this is a company where the share price is moving, but there's a legitimate reason why the share price is moving, because they're actually a company that is expanding by acquisition of more and more bulk carriers, and I think the demand is going to increase as we come out of the pandemic. So that's where we are at the moment with Castor Maritime. As I said, I did an initial presentation back on the 1st of February, which you can watch also. But I think there's a lot more room for Castor Maritime to grow, so I'm going to be investing more in this company. You can see how the over 1 year how the share price has performed. The height was 174, it's now back to 94. So even on a 52-week basis, there's a lot more room to get back to its highest price in the last year, and potentially there's even more room for growth as the company is expanding. So I hope you found this presentation of interest. Any questions or comments, more than welcome. Until next time, I wish you a really successful investing adventure.